Time now to talk business, thanks to our partners Forsyth Barr. Gas prices are soaring as conflict spreads wider in the Middle East. For more on this and local news, Garth Bray, host of Herald Now Business, joins me at the desk. Garth, good morning.
Good morning, Ryan.
Right, where are we starting?
Look, got to start with gas. I know you've been talking about it this morning, but news really quite sharply affected the markets this morning that the QatarEnergy halted production. And that has sent the spin, the price into a spin. The benchmark euro price, I think, jumped up. We've got a chart there if you want to take a look at that. Hit about 47.80 euros megawatt. It's dropped back down a little bit since. That's compared with an 8% jump in the price of crude, I think. So you can see that LNG is probably a bigger energy story at the moment than oil. And shipping is still the issue. Because they're saying, if we haven't got the shipping sorted by the middle of the week, then expect to see those sort of prices to bed in. But this hits 120 countries that Qatar supplies. It's 45% of India's LNG. It's 30% of China's.
20% of the world's, right?
But considering how much we supply China, how much we rely on China as our market, if they have energy problems, this is how the conflict spreads and how it starts to hit some of those below the headlines, how it starts to affect the world markets, right?
It's not a great thing to wake up and hear that an oil refinery in Saudi Arabia has been hit.
I was just going to say Ras Tanura, which is just north of Bahrain, and so this is it was hit by a couple of Iranian drones. They actually stopped them, but I think as the reports we're getting, but the debris and stuff started a wee fire, so they've halted production there. And it's the halts to production, like the Qatari thing, like the oil, that's probably more telling to that forward curve. If you start to see halts to production, then the market starts to price in scarcity further down the track. That's when you start paying more and I start paying more for petrol, and we all start, in everything around us, there's a bit of diesel.
Yeah.
Right? So we start paying more for that.
And Greg Boland we had on this morning, he was really good, but he was saying futures for, look ahead for oil, actually it's okay.
Because we're still seeing production.
Yeah.
As soon as that stops.
Yeah,
problems.
Well, let's hope it doesn't. Also, the Chinese. I was reading about the Chinese this morning, Garth. So 1.6, you'll probably already know this, 1.6 million barrels of crude oil a day that Iran produces, 90% going to China. So China buying the lion's share. And then you think, oh gosh, is China going to fall over? They have a stockpile of 1.5 billion barrels of oil, strategic petroleum reserves, enough to cover them for 200 days.
Well, that's good, isn't it? I think the States has got some caverns that they just fill with the stuff anyway, and they bought it when basically you were paying people to take oil off their hands. I think during COVID there was a period where the price actually went negative for a minute, and the US stepped in and bought this excess production, futures and so on, to dump it into holes in the ground because they didn't have enough pipes to carry it around the place. So they've got a few bits stashed too.
Right, back home, news of another big liquidation, but maybe the tide is turning on these.
Yeah, perhaps. Let's see how it goes. So Teak Construction, big construction company, kind of high profile because they've been working on a remediation just down the road from this newsroom that a lot of reporters walk past every day, Victopia. But 34 years in the business, more than 500 builds, nearly just short of $1 billion worth of construction activity, and they've gone into voluntary liquidation, called in the liquidators, or the shareholders did yesterday, and that is probably one of 758 in construction over the past year, which is an absolute tear. This is data from Centrix that's out today that's saying, look, basically company liquidations in total have hit nearly 3,000 on a rolling 12-month basis, up about 16%. But we're starting to see the business credit defaults come down 17% year on year. So if you're a business that's in trouble, there are more of those, but if you're a business that's still trading, your defaults are dropping. So it looks like the survivors are coming out of this, would be just my optimistic tick from all of this. But on the back of that, another chart of the day, this is a wee heat map of the slow payers, and this shows the north-south divide. This is, if you're in green, that means there's probably about 10% or less of your area is in credit default. If you're in red, it's more like about 18%. You can see it heavily clustered around the east coast. This is consumer arrears, rather. This is people that are behind on their bills, behind on paying all kinds of bills.
Look at the South Island.
Well, they're a bit like those Chinese with their oil stocks. They've got a bit of money in the bank. They can pay their bills. Up north, we're a wee bit slower.
Now, finally this morning, is this the Gary Economics guy?
Gary Economics, if you've heard of him.
Chloe went to see him in London.
1.5 million YouTube subscribers. This is a Citibank trader who basically in 2012, 21 made a name for himself in the markets, made an absolute poultice of money and then got out of it, wrote a big tell-all book, and is now running around the world campaigning that we should be taxing the wealthy at the same time as he grows his wealth by trading. I caught up with him while he was in Brisbane. He's on the way here for, I think, one night only in Auckland tomorrow night. Probably still get tickets to that. Have a listen to what Gary Stevenson says about house prices.
I don't see how stocks in particular can become more and more expensive while house prices fall, because at the end of the day, rich people are going to diversify. And I think what you're going to see, if those house prices don't start to rise, because rich people, the main reason is rich people don't want to own 100 houses because they don't want to fix 100 people's boilers. And what you're going to see is what you see in a lot of in the US is corporations fill that gap. Corporations come in, they raise the money from the rich, and they start becoming massive landlords. You know, you see BlackRock and Blackstone in the US buying up the properties. I think in the long run, if housing in New Zealand, in the UK, doesn't go up, you're going to see corporations fill the gap and push that up. And what that means is more ordinary people renting from corporations.
Right, okay. And so why do we care what he has to say?
Because he made a lot of money.
Okay.
I mean, but there's interesting stuff coming. I mean, look at that by-election in the north of England where they put the Greens in and they're all going in wealth. California, where there's a battle going on between people like Sergey Brin from Google and the unions to try and bring in a billionaire tax.
Yeah, but that's not working. Not even Gavin Newsom's on board with that billionaire tax. He thinks it's rubbish. And that's
anyway,
Gavin Newsom.
So I did the numbers. He's reckoned he put £1 million on gold at the start of COVID at $1,400 an ounce. It's trading $5,300 an ounce. So he's up about £1.8 million.
Yeah, there we
that.
go.
So
very good. He must be smart at something, clearly.
he said we couldn't afford, we could not afford his advice if he wasn't giving it away for free. A confident man.
All right, that's Garth Bray, and that's business thanks to Forsyth Barr.